Hello folks, Alibaba just released their third quarter results and the market shrugged its shoulders, not reacting much to the report at all. In this video, I'll go over the highlights of the report, technical analysis of the stock, and my overall opinion on Alibaba. Of course, this is not financial advice and is for entertainment purposes only. First, let's cover the not so good stuff. Revenue continues to stagnate at Alibaba, growing year over year by measly 5%. So it's safe to say that Alibaba is not a high-flying growth stock. It is, however, trading at a low forward PE of less than 10. So I guess you could say it is more of a value stock than a growth stock, which makes it an attractive long-term investment rather than a trade. Besides that though, there wasn't anything all that bad about the report. The net income rose 63%, mainly due to the increase in the value of investments. Remember, Alibaba holds stakes in a variety of companies such as Didi and Moonshot, a leading AI company in China. Speaking of AI, we see continued strong growth in AI-related product revenue, apparently growing triple digits year over year, although we aren't given any specific numbers. This is part of their broader cloud intelligence group, which is seeing growth in revenue at 7% year over year, but I really would have liked to see at least a double-digit percentage gain because the company has been investing a lot of free cash flow into cloud infrastructure and the returns are still yet to be seen. In comparison, Microsoft grew its cloud intelligence revenue by 20% this quarter. A bright spot though was seen in Alibaba's offshore e-commerce unit, AIDC. It grew in revenue by more than 29% year over year. This unit comprises their international e-commerce platforms like AliExpress and Lazada. In particular, it looks like a lot of the growth was due to the growth of certain segments like the AliExpress Choice business, which sort of looks like their response to ultra cheap competitors like Temu. And of course, Alibaba made an impressive $4.1 billion in buybacks this quarter, removing a net 405 million shares from circulation. There is still a whopping $22 billion left in the repurchase program until March 2027, so this is going to provide support for the share price. So what are my thoughts on this earnings report? The earnings growth was minimal, net income was average, and to be honest, there's not that much to get excited about. However, I'm still bullish on Alibaba due to one main reason. Even if Alibaba doesn't increase its revenue or earnings significantly over the next few quarters, the share price can still rise due to one important variable, valuation expansion. What do I mean by this? Let's look at Alibaba's current price to earnings multiple, which sits at a cheap 18.19. If this were to expand to say 25 or 36 without a corresponding rise in earnings, the share price could go up 50 to 100%. But then you may ask, how are we going to get this valuation expansion? And my answer is a bull market. If Chinese equities enter a bull market, which they have, then it's only natural that the PE multiple of these stocks expand as sentiment turns more positive. And despite the retracement over the past month and a half, Chinese equities are still in a bull market and have been since September. In addition, it looks like the Chinese consumer is finally showing signs of life again, with retail sales rising to an 8-month high, much more than analysts forecasted. Furthermore, there are growing calls for more stimulus to be announced by the PBOC and the CCP as the risks of a trade war rise with the Republican sweep of the US elections. Any further stimulus will only serve to support this new bull market in Chinese equities. Anyway, let's take a look at the chart of Alibaba. As you can see, after a large spike in price, it's come back down to nearly this long-term exponential moving average, which is the 40-week EMA. This sort of volatile behavior is quite normal in bottoming processes, and what I think may happen next is we will tag this EMA at around $84. This is the Hong Kong shares, by the way, and bounce off sometime in the next few weeks. Looking at the broader Chinese market, for example the iShares MSCI China ETF, a similar type of behavior can be seen. So whilst Alibaba has given back a lot of its gains over the past 6 weeks, it looks like the bottom is taking shape and I'm still bullish on the stock going forward. In my last video I said that it could get to 150 by the end of the year. Although it looks unlikely at this stage, it's still possible. But for now, I'm holding onto my shares and not buying anymore unless it starts to rise and show momentum again. Let me know what you think about Alibaba. Do you hold it? Do you think it'll go up or down? And don't forget to subscribe for more Alibaba videos. Thanks for watching and see you next time.